Hello, and welcome to the AIS webinar series today. Appreciate you taking the time to join us. These sessions present leading industry experts from across the insurance ecosystem, sharing their expertise and providing unique insights that can help our members, partners, and key stakeholders to be more successful. Today, we'll be looking at the value of effective risk control and risk management beyond the basics through the lens of carriers, policyholders, agents, and society at large. With that, I'm happy to introduce today's panel. First, we have Brian Senethan, VP of Risk Improvement from EMC Insurance, a longstanding AIS member company. Thank you for joining us. And Jacob Pereira, Solution Engineer from Risk Control Technologies, a new AIS community member. So with that, I'd like to turn it over to Brian from EMC to go ahead and get us started. Thanks, Brian.
Thank you, Truman. I'll start by sharing my screen. So I'm the Vice President of Risk Improvement at EMC Insurance. My contact information is there, and it'll be in the video that's sent out later. And if you registered online, you saw a headshot that I was asked to provide. That was the corporate communication headshot. But these are the headshots that I preferred. So here's a few of them. But we ended up with a formal, professional, corporate approved headshot. And it still doesn't look like me today. And but I do want to keep this very informal. At the end of each one of my sections, I will be asking for questions or input from the audience. Submit those in the chat, and we'll cover those kind of as we go along, and then there'll be some time at the end. So defining risk control. Risk control has lots of different names. So if some people have some ideas on what they call it, risk control within their company, if they've heard of, why don't you go ahead and shout those out in the chat right now, and then Jacob will share a couple of them.
Yeah, we got one, Brian, from Christy. We got loss control.
All right, thanks, Christy. Any other ones?
We got another loss control from Anastasia. I'll throw one out there, being from Risk Control Technologies, risk control. I know that's already on your board there.
That's my very first one.
There we go. We've got Truman throwing in underwriting. Risk improvement from Sandra Smith and Dan Crew.
All right. Thanks, Sandy and Dan. So here's some of the common ones. Risk management, risk improvement. That's what our company calls our loss control department. Risk engineering, risk services, safety engineering, safety services, loss control, which was already mentioned, loss prevention, accident prevention. That was actually the original name of our department in 1926. And any other names out there? Do those spark anything? Anybody else on the panel that has a different name besides the ones that I've got on the screen?
I've seen I see risk selection in there, which is a unique one I've seen, and I thought that was pretty interesting, but yeah, that can certainly be in there.
So there's lots of different names for our profession and our role and the activities that I'm gonna say we. I know we've got people from underwriting, maybe a CEO on there. I know there's a senior vice president of underwriting on here, Dan Crew. But this gives us kind of the context of what do we call ourselves. But there's really, we in general try to accomplish the same thing. So we'll talk briefly about what do we do and who do we do it for. And so here's a graphic. So one of the standard things we do is identify, evaluate, assess, and analyze risk. That's a core of what we do. And then once we have that information and we've done the analysis, we need to communicate the risk. But who do we communicate it to, and what do we do after that? So we're going to communicate risk to a variety of parties, not always all of them, but often our policyholders, the insurance company, our agents, and possibly society as a whole. And the important part of our process is making recommendation, advising, consulting, and providing ways to avoid or reduce risk. So we do all these things, but where's the value? Who receives the value? Why are we doing these things? So I'm going to start with a logical spot of our policyholders. That's the risk that we're almost always interested in. And what value are we providing to our policyholders by going through those steps and the processes that we have? So one of the things we can do is help them reduce the cost of risk, whether that's protecting their deductibles and not have to pay a deductible because they don't have a loss, potentially reducing their premium long-term, improving the terms and conditions of their insurance policy, and for some industries, even making the availability of insurance possible. If you have a high risk, high value operation, it may be difficult to get insurance if you don't control your risk at some level. So reducing some of those uninsured indirect costs. An example, the ASSP estimates that those uninsured indirect costs can be 20 times that of the insured costs. National Safety Council indicates that $1 spent on injury prevention returns $2 to $6 in savings to the organization. So some examples of where we can provide value to our policyholders. It helps protect their image, their brand, their reputation. When something really bad happens, think Exxon Valdez, you can damage your brand and your reputation for years. I don't remember what year that was, but it's still certainly in my mind of something bad happened where the risks were not controlled. It also helps hire and retain employees. There's quite a few studies that indicate safer workplaces have a better chance of retaining their employees, lower turnover, better employees, etc. And important in the indirect costs is maintaining service levels to their customers, or possibly even just staying in business because they have controlled their risks. The Insurance Information Institute estimates that at least 1 in 4 small businesses that closed during a disaster never reopen. So preventing that disaster from happening or mitigating the impact so you don't have to close can mean the difference between having a business and not having a business. Are there other ideas out there or examples of how risk control can provide value to the policyholders?
So on that, sorry, go ahead, Brian.
Go ahead.
I was going to say on that vein, so as I wait to see if there's any questions that come through from the attendees, I've got one for you. Have you seen a change over time in the way policyholders have expected your service that you guys provide from your team?
Certainly. I've been in the industry a little over 30 years, and I would say it's grown from a select few of policyholders or businesses that look at controlling the risk as a primary function of their operation to being kind of an afterthought. So I definitely have seen that grow, and it impacts us in a positive way because people are asking for our help.
Great. That's great. And I've got another one here. This was actually a question that came from registration. I think it's appropriate here. So regarding policyholders, and I know this from my experience talking to different insurance providers as well, usually more attention is paid to those larger employers. Do you have some ideas on how people can do a better job of getting, quality safety information out to the smaller employers as well?
Absolutely. 30 years ago, it was very, very difficult. But with, websites, internet, electronic newsletters, those kind of things, it is much easier today. It's still somewhat of a challenge. You have to have them interested. You have to find ways to push them towards those resources. But if you go to our website, you'll find examples of some of those things, whether it's online training, safety videos, regular newsletters, those kind of things. So there's some ways to efficiently, cost effectively deliver risk management services to policyholders of any size.
Yeah, perfect. Thanks, Brian. I think just lastly, Monica posted in the chat about the pandemic and how, of course, that's a risk that potentially nobody saw coming. And I'm sure that is, perfect situation of showing value to your policyholders, right? And in some of those ways that you mentioned, how it's changed, you can show value, even if there's an unforeseen risk, you're able to provide that service to them despite that, right?
Absolutely. And that's really regardless of size. With your larger policyholders, they have contact information and relationships with. You can do things online, kind of like what we're doing today, and certainly direct them to the resources that you have or resources outside of your organization, whether it's for pandemic topics, for example, the CDC and lots of other organizations. It was a great chance to talk about business recovery plans.
Perfect. Yeah, perfect. Thanks, Brian.
All right, we're gonna go on to our next customer in the value chain is our agents. And I know there's at least a couple of our agency partners online, or at least they registered. I hope they're online. So this will be of interest to them. Some of the value to our agents. So it gives access to market. If you have a policyholder that controls their risk, you have more markets that are more likely be willing to write those or provide a competitive pricing. If they have good loss control, either within the agency or the policyholder, or have access to a carrier that provides good loss control, they're likely to be able to write more business and hopefully increase the revenue. If an agent has policyholders or themselves providing good risk control, they may get more trust from the underwriter. So if an underwriter gets a piece of business submitted to them and they can demonstrate that there's good risk control going on, or they're willing to work with the risk control folks, the underwriter is going to more likely trust them because they're bringing them a risk management oriented, focused customer for us to put on the books. And through that process, it helps with ease of negotiation, saves time for the agency. If you have an account that is, or a policyholder that is controlling the risks, they're going to have lower losses on average, and the negotiation becomes easier, saves time for the agency. Depending on the contracts with the agency, there could be profit sharing. So account that has is more profitable, whether it's lower loss ratio or some other measure, they could have more revenue because of the profit sharing compensation. And as most people know, if you have happier clients, you got better retention. So having clients that are happy about the loss control that they're receiving from the insurance company, it's going to be easier for the agency to retain that business. And the opposite's true. So if you're providing poor loss control or no loss control, it may be more difficult, especially for those larger risk management oriented clients, to retain that business. Anyone out there have other value propositions for the agency when it comes to risk control?
So I've got one for you, Brian. In terms of your risk improvement processes that you guys have, how active do you find agents are within that?
Great question, Jacob. It really varies. It varies by agent. It varies actually within an agency by the account. We like it when the agency is interested in what we're doing, is active. Almost always they are pro risk control because of all these other issues or all these other topics we talked about. So it varies. I would say that they're more interested and active in the process today than they ever have been.
Perfect. We got a question from Craig. What percentage of revenue does most firms use for loss prevention? So I understand that might be a difficult question for you to answer, but what do you think?
So it varies all over the place. So there's different reporting groups that do analyze that. But it really depends on your mix of business. I would say it's much higher for larger accounts or high hazard type of business or group type of business. It runs around 1%, but I know it's skewed heavily to the larger accounts that could run as much as 5% maybe, and almost zero for those smaller Main Street, maybe BOP business, those kind of things.
Yeah. Yeah.
And it depends on your operating model.
Right.
If
Absolutely.
you want a low cost operating model and you fee everything out, you can get below that 0.5% pretty easy. But what value are you bringing at that point? It's all the internal value, which we'll talk about in a future slide.
Perfect. And we got a good comment from John. In a fee for service model, loss prevention provides more products and services to sell to clients. And then he mentions money always speaks to agents. So more of a comment than a question, but yeah, I think I assume that you would agree with that.
Yeah,
absolutely. Perfect. Yeah, I think we're good on this one.
All right. So the third party in the value chain, and it's the one that is the traditional one. It's the original one. It's the one we always think about, or not we necessarily in this group, but it's the one that most people think about is what value are we bringing to our own company? So, the number one reason that I would say risk control exists in almost every company at some level is being able to avoid that unacceptable risk. Knowing what you have, trying to predict what will be profitable or unprofitable business, so you can make those decisions early on before that unexpected event occurs. Kind of along those same lines, let's say it's an acceptable risk, but you can get better policyholder specific pricing depending on the state and the coverage and the filings and all of that for whatever risk is being presented. So as everybody knows, different states, different companies, different lines of business, there's some flexibility in the pricing that underwriters have. So the more they know about the risk they're insuring, the better pricing they can have. So that may be lower pricing so you can be more competitive because you know you have really good business, or maybe it's higher pricing so you can get more revenue because you know a piece of business is more risky than maybe its industrial class code or something like that represents. So we talked about the value to agents and policyholders. Those things have benefits to the company as well. It can help us attract and retain business, especially those that are risk management focused. So if you have a client that likes to have information and tools at hand to better control their risk, and you have those tools to provide, you have a better chance of attracting and retaining that business. And in the business that has lower loss ratios, you want to retain it. So maybe it's kind of back to that second bullet of better specific pricing. And then, reduce the risk of loss. If you think about all the names of all of our roles on that third slide or whatever it was, they're all about reducing risk of loss, whether it's loss control, accident prevention, it's all about reducing that risk of loss. So we don't have to pay claims, or we pay fewer claims, or the claims aren't as bad as they would have been without risk control built into their processes. So I looked up some statistics on this, and this was a very specific analysis that was done. And this kind of goes back to one of the questions I think about data. There's research that I read about in the Journal of Safety Research, and it was around self-insured construction pool, and they did some analysis and they compared those accounts that had, or those businesses that had no loss prevention contact to those that had one contact or more, and they showed a 27% reduction in risk of having a loss. Now, was it cause and effect, or was it because those accounts that were more risk management, of a more risk management mindset wanted the contact? We don't know for sure, but it's still an indicator that the risk control matters. Another study, and this was in California, it's a little bit older, it's like the early mid 2000s, and it was done by the National Library of Medicine, and they showed an over a 10% lower loss ratio, 29 fewer losses, and a 43% lower severity with 2 years of loss control services to those accounts that had no loss control. So they didn't have any meaningful loss control visits or anything. So there's some evidence that what we do matters. And it's, while those numbers aren't exactly the same between those two studies, they're in the same ballpark. And this goes back to that attract and retain business, identifying those accounts that they have a risk management mindset. So if we can provide some differentiating service to attract agents and policyholders, that's a value to us as an insurance company. Again, it's back to, do they have a risk control mindset, those kind of things. And the other piece of that is important is communicating the business value. So if we can communicate the business value to the policyholders beyond the insurance, there's a lot of correlations to safer work environments, to higher productivity. We talked about better, lower turnover rates, hiring and retaining better employees, those kind of things. Does anybody out there have other examples of where risk control can provide value to the insurance company?
As you kind of alluded to, Brian, during that slide, there were some questions around data analytics, data collecting, Internet of Things, and different technologies. And I'm going to try to do my best to encompass that in this question. But at RCT, as a loss control service provider, we always hear from different insurance companies about the need to get data, right? And not only get that from their visits or for conversations they've had with their own policyholders, but then able to use that, whether they're pooling that information that they're getting in loss control with, actuarial data or anything like that. So I guess all that to say is, are you finding the need to back up, different claims, basically that proposition of the insurance company is getting a lot of value from loss control, and are you finding that's easier now with that as a focus, or what are your thoughts around that?
I certainly think it's easier today in some regards. The amount of data we have available today from even a year ago is incredibly more. And we're not going to get into big data today, but it also creates a challenge of being able to collect the right data, compare the right data. A common saying in the industry, and certainly in the profession, is you can't prove what didn't happen. So just to draw a correlation between A and B is difficult. But like in those two studies, if you have a big enough pool and you have the right data, I think you can draw those conclusions in a more of a global sense. There's tons of anecdotal evidence,
right?
Whether it's feedback from agents, case by case. I certainly have a ton of examples of cases where the policyholder said, we had a higher quote from somebody else, but we love what you're doing. We have same kind of anecdotal evidence of policyholders that maybe changed their philosophy over our business relationship and came in with a mindset of, I'm selling gasoline and that's what I do, to, oh yeah, I have customers that could slip and fall and I need to find ways to protect them and reduce it. So there's tons of anecdotal evidence. And from a data standpoint, those are going to be good components to compare to the rest of the business we write. It's challenging. I'll tell you one of the reasons. So I'm a customer of RCT, and one of the reasons we went with RCT was because access to some of those pieces of hidden data that were buried in PDFs and paper and those kind of things. So, the data is certainly important, and it'll be more so in the future.
Yeah.
You mentioned IoT, so I can mention a couple things that we have because there's been press releases on it. So we're working with a couple different IoT providers. They're kind of in their infancy. One of them is related around property losses and predicting freezing, water loss, those kind of things, and be able to mitigate those before they cause real damage. And then the other one is a startup. It's called Make You Safe, and it's really in the work comp space. And I won't go too much into that, but it's spelled MAKUSAFE, and it's a wearable IoT device that picks up noise, sound, heat, slip and falls, those kind of things.
That's really cool, actually. And that, I think, goes into this question that we've got at registration. It looks like it was from Jessica, and it was about how, or trying to get your thoughts on trying to make safety culture from being reactive to preventative. And you kind of mentioned a couple there. Is that basically where your head's at? Is that's kind of the key plank?
Definitely. I think as an insurance company, you can affect safety culture, but everything has to be right. So, in my opinion, what's more important is identifying that safety culture and trying to add to it and help it grow. Everybody has a safety culture. It may be in its infancy, it may be poor, it may be excellent. So, in our role, we can help affect that, provide them tools, provide evidence that what they're doing is valuable and saves them money in all these different ways.
Perfect. Thank you.
Okay. So the last one, and this last one's important. It's society. They're really not part of the contract. With agents, policyholders, insurance company, that's a contract. That's close. We have mutual benefits. They're easier to see, at least on the surface, but there's a impact to society. One of our company visions is we're here to make lives better. And so whether it's our company, whether it's our policyholders, our employees, our agencies, or society as a whole. And risk control certainly has a piece of that. And I'll talk about a couple of things there and be thinking about what other ideas or examples that you guys can share. So when we help prevent injuries to employees, customers, and public, obviously injuries, from minor to catastrophic to death, those impact society. Even if it's just the family and friends, those things, if they can be prevented, they can have a positive impact on society. You think of auto accidents, slips and falls, product injuries, all those things that as a risk control professional that you look at and can identify what hazards and risks and preventive measures are available. Whenever those things are prevented, that's a positive impact on society. I talked about earlier how a disaster can put a company out of business, even if it's temporarily. That affects the employees. So by protecting those jobs and by helping employers stay in business, that's certainly a positive impact to society. Another study: 40 to 60% of businesses don't reopen after a fire disaster, and 90% go out of business in 1 year. So their definition of disaster was long and complicated, as you might think from a government agency, but that was FEMA's data. Communities often, especially smaller communities, have a high reliance on some policyholders' organization, whether it's a church or the grocery store or only the only gas station in town, or the school. When those things are impacted, it impacts the whole community. And in addition to just the individual impact, affects employment, those services that we talked about, and tax revenue. So an employer that goes out of business, especially if they're a major employer in town, providing a high percentage of the tax revenue, can really change the whole culture of a town and have it go from thriving to dying. And then there's the cost of occupational injuries and death to society. National Safety Council estimates that's a $198 billion a year cost. And the less injuries, accidents, disasters, they reduce stress on the health and legal systems in the country. We've seen this, more drastically in the last 12 months with COVID and how that affects the nurses, the doctors, all of those things. Work comp costs for just the medical costs is a $30 billion cost, according to the National Academy of Social Science. Other examples, how the profession and the activities of risk control provide value to society.
I'd love to hear everyone's thoughts on that, so I'll keep an eye on the chat here. But for Brian, I am curious. Like, I don't think I'm off kilter by saying I think society at large probably doesn't have the most colorful and positive outlook on what insurance does for them and society at large. So what is it that you think insurance carriers can do or companies can do to kind of promote that?
There's quite a few things we can do, and I won't get too deep into it. It really depends on company philosophy, but there's certainly things that you can do there that are community oriented, that shows we care about the community, whether it's where you donate your money, where you volunteer. But when it comes down to a business by business, we have to be professional, honest. Integrity is super important. Follow through with what we say we're going to do. And from a loss control standpoint, more specifically, making sure that how we communicate to the policyholder demonstrates that there's a benefit to them in doing these things that we identify to control risk. Often insurance companies get lumped into all kinds of categories. I go on fishing trips, if you didn't remember. And sometimes I'm meeting with people and they go, "What do you do?" And I sigh, and then I tell them, and they go, "Oh, insurance companies." And and maybe they had a bad experience with a life agent that just bugged them and bugged them and bugged them, or they had a bad experience with a personal claim with their home or their car. I think we just have to keep at that at an individual level and our association levels, and make sure that we communicate what we can about the value we provide to society.
Yeah, no, that's perfect. And we did get a couple responses coming in here. So there's some from Lydia. Quantify the risks to the audience of the employees associated with the lack of an in-house return to work program. So I guess that makes sense. It kind of goes into what you were saying before about getting data and using it effectively, and also providing value. Is that something that is kind of on your radar?
Yeah, definitely. Return to work is super important, and everybody in the whole chain benefits from that. And I'll start with the employee. The employees benefit so much from coming back to work. And I don't have them at my fingertip, but there's lots of studies that show that if employee comes back to work sooner, they're more likely to come back at all. The longer they're out, there's less likelihood that they will return to work. So getting an employee back to work, getting them off the couch, finding something that they can do that is valuable to them and to the company, and still working within their work restrictions so they're not re-injured. Tons of benefit. The benefit to the insurance company and the insurance agent is like controlling any other risk. Reduce litigation costs, indemnity costs, all those things.
Very nice. And we've got one from John, and so he's kind of mentioning the riots that happened in 2020, but you could probably extend that out to many different things, maybe weather events, and then it really drives to his question on how do you see loss prevention playing a role in counseling insureds and ultimately society in protecting themselves and their property, as well as preparing themselves to mitigate exposure. What's your view on that?
So I'll deal with the exposure part of it. Obviously, there's the property damage, but getting back into business, a business recovery plan, it's another great example of having a business recovery plan. What am I going to do if there's a fire, whether it's caused by civil unrest or whether it's caused by a coffee pot that overheats. The business recovery plan's a lot the same. Depending on and some of these events were unprecedented for most people in, probably since the 60s anyway. And be able to have a hardened system, whether it's locks on your doors and those kind of things. You're not going to be able to prevent everything, but if you can mitigate the impact, that's really what's important.
Yeah. And I feel like a lot of that, what you've been talking about through this presentation in general, whether it is that, unprecedented event or something that isn't so insane to think about, like a break-in, then it's all about prevention and mitigation, being preventative and not reactive, right?
Right. And you still have to be able to react, but yeah, you need to be proactive first, because that's the only thing you can do before something happens. And then you still have to be reactive. You have to execute on those business recovery plans, the cleanup costs, or the cleanup activities, those kind of things.
Perfect. Thanks, Brian.
All right. So I'm about ready to wrap up here. So be thinking about other questions you have. And so back to that first slide that I shared, or the early slide that I shared, is identifying, evaluating, assessing, and analyzing risk. That's what we do. That's kind of at the core of what we do. Then we have to communicate about that risk, whether it's the risk level or what the risk is. And then we have to advise on how to control, mitigate, provide consultation to avoid or reduce the risk. And then who those different people that we might be providing that service to. And optimally, those things that kind of meet in the middle is where the most value is. And that's, for our policyholders, society, agents, and the insurance company. This graphic shows a very small, if you're into Boolean algebra, it shows a very small area where those overlap. That's really for a matter of fitting all the text in. There's a lot of overlap. And if you think about what we talked about today, the overlaps are huge. So that's what I have. Questions?
So I'll give it some time, maybe another half second, but I am just kind of curious, Brian, and we did talk about this at different points, and I know you mentioned it too when we were talking about this ahead of time, where you're happy to put some statistics in. But how have you seen the ability to do and measure analytically all of the things that risk improvement does on a day-to-day basis, and to provide and show that value for each of these elements, as opposed to just anecdotal evidence?
Yeah, it's challenging. We have an analytics department that I'm working with, and it's been an ongoing challenge. If you can find the anecdotal evidence is probably the most common thing that you can find. When you have a policyholder or an agent give you good feedback, whether it's on the retention side, but sometimes you find something that is bad and nobody does anything about it, and there's kind of the "I told you so," which isn't an awesome place to be, but that's evidence as well. I think as more data becomes more accessible, so there's a difference between data and information. We have lots and lots and lots of data, and it's a challenge today, less so in the past. But I think that's where the future's at, is being able to put all that stuff together. Some of the IoT stuff is certainly going to help us in certain segments of being able to identify risk and quantify risk for us. But there's the historical aspects of it as well.
Perfect. And we're getting more questions coming in here, Brian. This one's interesting. It kind of goes back to a piece of the conversation we had a little earlier. But Lorna asks, in your opinion, what is the time cost value of risk control to smaller premium accounts?
The time cost value. So I will say it depends. It's my go-to answer on almost everything. It depends. So, it's certainly something you have to balance and find ways to efficiently deliver the tools and the information and the solutions that they want. As risk control professionals, I didn't hit it on here, but we can't do anything to make a policyholder safer or reduce risk. All we can do is consult and advise. So if you have a smaller account, maybe you balance that time value proposition with answers over the phone, or directing them to existing resources, or holding webinars for maybe an agency or an industry group, or speaking to the industry conferences when those start happening again, and be able to provide tools and information and solutions there.
This next question is about if you handle a lot of inbound policyholder requests, do they often come to you for help? And I guess that would probably be a good sign because you're showing value. I'm curious how you handle that.
Yeah, they almost are all looking for help when we have inbound requests from policyholders. So those are good indicators that they at least think they have a problem and are looking for a solution. So lots of different ways to handle those. That's up to each individual company. But that's what most of our inbound requests are for, is for help on a particular topic.
Now, I've got a really good question here from Christy, and I think this might be a good one to potentially wrap up with. There are more in here, but maybe we can follow up on that. What do you think will be the biggest disruptor to the industry in the next 5 years?
Data. So we've talked,
recorded, Brian.
Yeah. So data. You can play this back in 5 years. I'm almost positive it's going to be data. So whether you're collecting data, maybe it's aerial data from drones and planes and satellite, whether it's data from third-party sources for automobiles or the IoT that I already mentioned. I think those are going to be the disruptors. I think they're going to be so most people think of disruptors as bad things. I suppose if you don't recognize them, don't plan for them, it could be a bad thing. But if you got your eyes on them or are following them, I think they're going to be positive for the industry. That way, when we get to it, identifying the risks will be easier. We'll be able to communicate the risks better, and with artificial intelligence and similar technologies, we'll be able to come to solutions better, and customers will be able to self-service. Those people that have those things, those companies, those agencies, they're the ones that people are going to look to for solutions.
Perfect. No, that's great. Thanks, Brian.
Fantastic. That was a good question to end on, and certainly another great place to start the next conversation. As you mentioned, the future of data in the industry. Certainly at AIS, we agree that is absolutely the foundation upon which we're going to build that future of insurance and risk control. So Brian and Jacob, thank you so much for those great insights today and how we're better able to manage risk when aided by technologies and partners like EMC and the very aptly named risk control technologies. There's certainly a lot of opportunity out there. As you just mentioned, more technologies are available to be incorporated into this solution. Also want to thank our audience and everyone for the great questions and participation today. Hopefully you all found it very valuable. Please keep an eye on AIS Views for the recording of this session, which should be up in the next day or so. Please also check AIS Views for the next edition of the AIS webinar series, as well as other information and resources on risk management, AIS programs, timely updates around compliance and emerging technologies, as well as information on community partners like risk control technology. Sorry, you think after an hour I'd be able to say that. Thanks for everyone for your support of AIS and being a part of our community. Please reach out if there's any questions or if you have questions about being further involved. Anything that did come through the chat, we will make sure to follow up with that directly. Thank you very much. Have a great day.